Good morning and happy holidays to all our listeners. Today's episode is packed with exciting news, from Coinbase's impressive revenue numbers to a deep dive into the historically bullish fourth quarter for Bitcoin.
That's right, and we'll explore what's behind these major stories. Starting with Coinbase, it's been reported that the crypto exchange has surpassed both the Nasdaq and another major securities exchange in terms of transaction revenue over the past 12 months.
This is huge news, considering the Nasdaq is home to some of the world's most valuable companies like Apple, Google, and Microsoft. Coinbase's transaction revenue reached $5.75 billion, compared to the Nasdaq's $4.54 billion. What do you think is driving this growth?
According to analysts, this surge in revenue is largely due to the growing adoption of cryptocurrencies and the increasing popularity of Coinbase's services. It's also worth noting that Coinbase has been expanding its offerings beyond just trading, with services like staking and custody.
That's a great point. And speaking of growth, historically, the fourth quarter has been Bitcoin's best, with prices up by an average of 85% since 2013. But this year, it seems like the Santa rally is missing. What's behind this underperformance?
So it's interesting because on average, the last week of the year tends to see at least a 3% gain for Bitcoin. However, over the past 5 out of 6 years, we've actually seen a decline during this period. One possible explanation is the current short-term holders' realized price, which sits at $84,000. This suggests that the bull market is still intact, but perhaps investors are being more cautious.
That's a great point about investor caution. And it's also worth noting that the crypto market is highly volatile and influenced by a wide range of factors, from global economic trends to regulatory news.
Absolutely, and we'll be exploring some of these factors in more depth throughout today's episode. But for now, it's clear that Coinbase's impressive revenue numbers and Bitcoin's underperforming fourth quarter are setting the stage for an exciting discussion.
And we'll continue to break down these stories and more, so stay tuned.
So just to follow up on our conversation about the IMF and its stance on cryptocurrency adoption, it seems El Salvador has just secured a $3.5 billion funding deal that has some interesting implications for their Bitcoin strategy.
That's right. As part of this deal, Bitcoin will remain a legal tender in El Salvador, and the country will continue to buy Bitcoin for its strategic Bitcoin reserve, possibly even at an accelerated pace.
Building on what we discussed earlier about governments and institutions becoming more open to cryptocurrency, this deal seems like a significant win for El Salvador and the broader crypto community. It sets a precedent for other countries to consider similar strategies.
Exactly, and it's worth noting that this deal also includes plans to build out Bitcoin capital markets, like the recent tokenized issuance we've seen. So it's not just about accumulating Bitcoin, but also about creating a more robust ecosystem around it.
Speaking of which, it's interesting to contrast this news with what's happening in the spot Bitcoin ETF market. We've just seen record withdrawals from these funds, with investors pulling out a staggering $671.9 million.
Yes, and that's not all. The annualized premiums in one-month CME futures has dipped below 10%. Which is a sign of waning short-term demand. It seems that investors are getting a bit cautious, especially after the recent post-Fed losses that pushed Bitcoin below $100,000.
That's a good point. It's possible that investors are taking a step back to reassess their positions, especially given the current market volatility. But at the same time, the news from El Salvador suggests that there's still a lot of interest in Bitcoin from a more macro perspective.
Absolutely, and I think that's what makes this space so fascinating. There are always going to be fluctuations in the market, but the underlying trend towards greater adoption and institutional investment seems clear. It'll be interesting to see how this all plays out in the coming months.
Definitely. We'll continue to keep an eye on these developments and provide updates as more information comes in. In the meantime, it's worth considering the potential implications of El Salvador's deal and how it might influence other countries to follow suit.
And on the flip side, we'll also be watching to see if the spot Bitcoin ETF market can recover from these record withdrawals. Will investors jump back in, or will we see a more sustained period of caution? These are the kinds of questions that make this space so dynamic and unpredictable.
Building on what we discussed earlier about the challenges facing the crypto industry, it seems like some companies are reevaluating their strategies. Copper, a digital asset custody firm, has withdrawn its application to become registered with the UK's financial services regulator.
That's right. Copper has decided that registration in the UK no longer aligns with its future business plans. Instead, the company is shifting its focus to markets such as the USC, Europe, and the Middle East.
This strategic move is quite interesting, especially considering the UK's efforts to establish itself as a hub for crypto and blockchain innovation. It raises questions about the attractiveness of the UK market for crypto companies.
Absolutely. The UK has been trying to create a more favorable environment for crypto businesses, but it seems like copper has decided to prioritize other markets. This could be a sign that the UK still has work to do in terms of creating a competitive landscape for crypto companies.
Speaking of competitiveness, let's take a look at the latest developments in the world of Bitcoin ETFs. Yesterday, Bitcoin spot exchange traded funds saw record high net outflows of $671.9 million, the highest ever reported since they launched in January.
That's a staggering number. The Grayscale Bitcoin Trust lost the most capital, with $208.6 million in outflows, followed by the ARK-21 shares Bitcoin ETF, which lost $108.4 million. This massive outflow aligns with the recent downturn in Bitcoin's price, which is trading at under $90,000 at the time of writing.
This is a significant development, especially considering the hype surrounding Bitcoin ETFs earlier this year. It seems like investors are becoming increasingly cautious and are pulling their money out of these funds.
Yes, and this could have a ripple effect on the broader crypto market. If investors continue to lose confidence in Bitcoin ETFs, it could lead to further price declines and increased volatility.
So it's also worth noting that this record high outflow comes at a time when the crypto market is facing increased regulatory scrutiny and uncertainty. This could be a sign that investors are becoming more risk-averse and are seeking safer havens for their assets.
That's a great point. As we discussed earlier, regulatory uncertainty is a major challenge facing the crypto industry. If investors continue to pull their money out of Bitcoin ETFs, it could be a sign that the market is pricing in this uncertainty and is preparing for a potentially rocky road ahead.
Building on what we discussed in the previous segment about the potential market downturn, it seems the Christmas spirit hasn't quite reached the crypto market yet. We're seeing Bitcoin, XRP, and Dogecoin experiencing a significant slump in prices.
Yes, and looking at the numbers, it's not just those big players taking a hit. A lot of the top cryptocurrencies by market capitalization are in the red. It's a sea of red across the board. You have to wonder, is this a buying opportunity or a sign of things to come?
That's a great point. Speaking of opportunities, there's an interesting development in the DeFi space that caught my eye. Lombard Finance is aiming to make Bitcoin the collateral of choice for DeFi. They're launching a yield-bearing Bitcoin token called LBTC.
Now that's an intriguing move. As we know, Ether and its derivatives currently dominate the collateral in the DeFi ecosystem. But if Lombard Finance can make this work, it could potentially bring a new wave of liquidity into DeFi. The question is, can they succeed where wrapped Bitcoin, or WBTC, struggled?
Exactly. Wrapped Bitcoin was supposed to be the solution to bringing Bitcoin into the DeFi space, but it never really gained the traction everyone expected. What makes Lombard Finance think their approach will be different?
From what I understand, their strategy revolves around creating a more seamless and efficient way to utilize Bitcoin as collateral. They believe that by making it easier and more cost-efficient, they can attract more participants into the DeFi space and ultimately make Bitcoin the go-to collateral of choice.
It's ambitious, but if it works, it could be a game changer. A war for on-chain market dominance might be brewing between Ether and Bitcoin. This could get interesting, especially considering the current market downturn. Maybe this is the catalyst the market needs to turn things around.
Well, we'll be keeping a close eye on this development and the overall market trends. As we head into the holiday season, it's essential to stay vigilant and adapt to the ever-changing landscape of the crypto world.
Absolutely. And speaking of adapting, it's worth noting that this potential shift in the DeFi space could have broader implications for the entire crypto market. If Bitcoin becomes the collateral of choice, we might see a significant shift in how investors approach their portfolios.
Yeah, that's a great point. It's essential to consider the bigger picture and how these developments might impact our investment strategies moving forward. We'll continue to monitor the situation and provide updates as more information becomes available.
And that's all for now. We'll be back with more news and analysis after the break. Stay tuned.
And as we wrap up today's show, I want to circle back to our earlier discussion on the crypto market's downward trend. Bitcoin's plunge to $93,000 and Dogecoin's 27% drop are making headlines, and it's clear that investors are feeling the pinch.
That's right. The numbers are staggering, and it's not just limited to those two coins. We're seeing a broad market slide, with Ether, Solana, Cardano, and others taking a significant hit. It's a tough day for crypto enthusiasts.
Now, some traders are attributing this downturn to the hawkish tone in this week's FOMC meeting. It's possible that investors are getting spooked by the prospect of tighter monetary policies and are pulling out of the market.
That's a plausible explanation, but it's also worth noting that we're seeing a lot of volatility in the market right now. It's not uncommon for crypto prices to fluctuate wildly, especially during times of uncertainty.
Speaking of uncertainty, I want to bring up our earlier discussion on the Solana meme machine pump fund, which was just named Decrypt's 2024 Project of the Year. It's interesting to see how this platform has democratized access to creating and trading meme coins.
Exactly. Pump Fund has lowered the barrier to entry for people who want to get involved in crypto, and it's led to a surge in token creation and trading. Love it or hate it, Pump's impact on the market has been undeniable.
And it's also worth noting that this trend towards decentralization and accessibility is likely to continue in the coming year. As more people get involved in crypto, we can expect to see even more innovative projects and platforms emerge.
Absolutely. So what are the key takeaways from today's show? Well, first and foremost, the crypto market is experiencing a significant downturn and investors need to be cautious. However, we're also seeing a lot of innovation and growth in the space, particularly with platforms like Pump Fund.
And looking ahead to the new year, it's clear that crypto is going to continue to be a major player in the world of finance. As we head into 2025, investors need to stay informed and adapt to the changing landscape.
That's right. It's going to be an exciting year, and we're looking forward to bringing you all the latest news and analysis. Thanks for tuning into today's show, and we'll catch you all in the next one.
And before we go, a quick reminder to check out our website for all the latest crypto news and updates. We'll have more in-depth analysis on the market downturn and the impact of Pump Fund on the Solana ecosystem.
And don't forget to follow us on social media for all the latest updates and behind-the-scenes insights into the world of crypto. Thanks again for listening, and we'll talk to you soon.